Welcome, folks. So, this is British Pound USD. So, today we had a couple of news events that were supposed to happen. So, today we had three setups that were valid. Not even three. We had four setups. So, the first setup was we had these buys. Then now we had this sell. Then we had this buy taking out that high, and then now we had this bearish move which took out sell side that was residing below that low. So in the morning during the London Open kill zone, we had we were trading, we were gravitating towards the upside. So it was simple for price to trade into such an inefficiency, because if we take our fib, anchor it from that high to this low, as you can see, we were at premium during London Open. So it was so obvious for price to trade into this inefficiency and then move to the downside, but we didn't get that. So in what we got was this was used as an inversion fair value gap. So we had these buys up to this point, and then price went above these the fair value gap, and then came back. The bodies, as you can see, there was no body close below, no candle close below the midpoint of these inefficiency. So this is the 15-minute chart. So we had that, and at 2:45 we took sell side below these lows, and here we had a fair value gap. So we had an overlap of three fair value gaps. So we had this one, we had this one, and also we had this fair value gap. So if you extend that through, we dug into this inefficiency and then taking out these relative equal lows. If we head over to the 1 minute chart, we'll be able to see that. So let me mark these lows right there. So we had a run on liquidity at that particular time, and then we had it was trading inside these fair value gap. So that was the London Open kill zone. So the aim or the drawn liquidity would have been this high right here. So this high would have been the drawn liquidity. So hit that high, but price went all the way up. We had if we head over to the daily chart, let me show you. We had these high right there. It went past that high, took that high, and then we had now these retracement. So go back to the 15-minute chart. So it took that high at around 4:45, and I'm always referring to the New York local time. So we took that high at 4:45. So the draw on liquidity would have been these volume imbalance, which was right there. So hit that, the midpoint of that, and then this was around 7:30, which was the New York Open kill zone. So we hit that, the midpoint, and then shifted higher, taking out that high. and at exactly 9:30 we had that run on liquidity for these relative equal highs right there. So let me mark that. We had a run on liquidity right there. We took buy side right there, and then we had news coming in. We sold short, aiming for half of these dealing range, which was, let's say, something like around here. We had an inefficiency right there, and also we had this inefficiency right here. So that could have been the drawn liquidity. And then we had this low. We hit that. As you can see, our price came all the way down, clearing even these this fair value gap, and then now we have this retracement to the upside. So those were the trades that we had today. So we had 1, 2, and then we had 3, 4. We had 4 trades. You could have also traded these, aiming for these volume imbalance, and we have also a liquidity void part of being part of these inefficiency. So that was it. So if we head over to the 1 minute chart and see exactly what was happening. So we start off by the London Open kill zone. So this is how price was. As you can see, we had these relative equal lows right there. We took those at exactly 254. So the market shifted higher. We had a market structure shift. We took this swing high right there. We had these fair value gap, and this would also be a breaker. So we had low, high, lower, low. So that's a breaker. So we had that. We also had this as an inversion fair value gap right there. So price came all the way down, trading into this inefficiency. So this would have been your entry long, and then your stop be placed just below this low, or below the midpoint of the inversion fair value gap. So we had that. So entry long right there, and then your stop just below the midpoint of that inefficiency. As you can see, there was no candle close below the midpoint. So that is signature that we really bullish, and price is likely to move to the upside. So we had that. So the first drawn liquidity would have been this high right here. So this would have been, this was yesterday's high. That's a total of 11.69 R trade. So and as you can see, we were nearly at London Open. So we had that. We traded that. If you could have held a little bit longer, we had news that came in. We traded into that. That would have yielded a total of 16.94 R trade. So we had that. After taking out this high right here, we took out that high. Shift in market structure right there. We also took out this high using this run to the upside. And let me zoom in a little bit. So as you can see here, we had these candles right here got taken out right there. So if you are an aggressive type of trader, you could be going short right there and then placing a stop just above that. But if you are not, wait for a shift in market structure, which we had right there, and then price came all the way up, trading into this inefficiency, which price left us after taking out this low. So that would have been your entry short right there. entry short, and your stop be placed just above that high, because right now we had already taken out buy side that was residing below those lows, so it was enough, and we have this displacement to the downside. Now if you see what time is it, it's around 4:50. We had these candles at around 4:51 exactly. So during 4:50 to 5:10, there will be a macro which will price will pull into a certain direction. So during that time, that would have been your entry. During that period of time, aiming for the midpoint, or just place your right there. That would have been a 13.8 R trade. So that was it for London. And then now here we had the New York open kill zone. We traded all the way down to that inefficiency. We had this inefficiency right there, which was a volume imbalance. Here, as you can see, we closed right here, but we opened right there. So this becomes a volume imbalance, because the opening price, the closing price, and the opening price of this candle was not the same. So we gapped up. We were moving down, and then we gapped up. So that automatically becomes a volume imbalance. And also we had a liquidity void right there, where no candle, where no trading took place, not even weeks. So that was it. So we hit that at exactly this was at 7:30. We had if you are that type of guy who is aggressive, you could be going long, because as you can see, there was no candle closed below the 50% of this inefficiency. So we had that. But if you were not willing to risk, we had a swing high right here, and then it got taken out right there. We also took out this swing high, came all the way down. We had this fair value gap, so entry, and then your stop just below this low, because you should incorporate this fair value gap, being that price might want to trade into. So we had that. Also we had this fair value gap, which was now during that time, which was supposed to be an inversion fair value gap. So as price went up to the upside and then coming down, hitting that, could be going long in that. So we're going to use this as our entry right there. There's no problem framing your entries with this. We had that. So long positions right there. So our stop would have been placed just below that low, and then the draw. Sorry. Then the draw would have been either 50% of this dealing range or the high right there. So we had that. So that's it. That was a total of 13.19 R trade, which we had right there. So we also had this trade, which was during the news event. As you can see, we took out that high right there. We took out that high, and then we also had these relative equal highs, which got taken out right there. And then we had an inversion fair value gap right here. As you can see, we have a very small inefficiency. right there. So that would have been your entry short right there, and then your stop just above that high. So entry short, stop just above that high, and then 50% of this dealing range, and also this low, which would have been a 10-hour trade. So that was it for today. We also had this retracement. It wasn't so bad. Could have traded this, aiming for this volume imbalance right here, liquidity void, sorry. We had liquidity void right here, so that could have been the draw on liquidity. We have that. So I guess that's it for today. I guess I don't have anything else to add to that. And those were quick scalps which happened during the intraday trading both sessions which we have. So I guess that's it for today. And till I talk to you next time, be safe.